Welcome to our panel, InsureTech, the new kid on the block. Let me start with you, Girish. Technology has definitely disrupted the insurance sector, be it distribution, underwriting claims, or even product development. Can you take me through some of the tech trends that you're seeing in the insurance sector?
You see driverless cars, that's one thing that's going to really change technology. At one point, you're talking about motor insurance adapting to telematics,
sure,
which is basically understanding driver behavior and understanding how to use a pay-as-you-go model. But driverless cars eliminates drivers altogether. So whom are you going to insure?
Yeah.
So that's a big trend. The other trend is the wearable devices which are monitoring your health. So that's a significant amount of data that you're collecting on the individual, his behavior patterns, his diet patterns, everything. And that is something that could change the way health insurance is delivered to the customer. A lot of Internet of Things, IoT technology, where you are able to have devices control and manage other devices. That is going to bring a whole lot of change in various forms of whether property insurance or any fire insurance. So that also causes additional insurance opportunities in terms of cyber insurance which open up. So I think technology is disrupting the way insurance is delivered, as well as giving new opportunities for the insurance sector to insure.
Now, when it comes to policy underwriting, firms are now able to transform customer data into actionable insights to make more informed individual risk assessments. So rather than just relying on responses from standard questions, now this is demonstrated with the advent of black box car insurance, where premiums are based on the quality and quantum of driving by the policy holder. Your thoughts on this?
Telematics, what we're talking about, black box car insurance, is something, first of all, in India, it's a vehicle which is insured, not a driver, unlike in most other countries where the driver gets the insurance. So where in the US and other countries, for example, where the driver gets insurance, it's great for the insurance company to have information on a driver. It's also great from the customer's point of view, because if you are able to get insurance only for the time you require, I mean, if you're a weekend driver, 5 days a week, your car is in the garage. Why do you need to pay insurance for the days the car is in the garage?
Correct.
You can only use it for the 2 days that you're driving on the weekend. And turn on your insurance and turn it off the moment you finish driving the car. And that is possible through use of telematics.
Yeah. Krishna, let me come to you. Now, you founded Cropin Technologies in 2010, which essentially provides smart farming solutions. You're basically tracing every farm and farmer. Tell me, how can imaging solutions can be used for crop insurance?
I would like to show you small screenshots that will give you a much clearer picture at how do we go about with the farmer, and how do we kind of create a crisis rating for a farmer in terms of a digital scorecard. So this is somewhere in Punjab, some farmers are doing potato, and you look at the red ones, they are infected farms, the green ones, which are little healthy farms. And then we go and click one of the plot, it gives you a digital scorecard of the farmer with which variety he's done, what expected output. And then we also monitor with the satellites. So after 5 months, you can see there are yellow patches, green patches, which part is doing better, which part is not doing better. And then we talk about what could be the yield. So we predict much before the harvest. We don't stop there. We go back in 2013 with the same plot. If that plot came to my platform today, I go and look at the history of 2013 and say, can bank go and say that, okay, there is not, this farmer is doing pretty well. Looking at last 3 years history, because I've got image for every month or 3 days in a month, and give them alternate source of data to take better decision with him. Or in terms of insurance, can I personalize his insurance premium? I mean, today it's a group insurance, but tomorrow can we go ahead and give a farmer personal insurance based on his farm is different from the other farm, his crop is different from the other crop. The risk on that crop is different from the crop other guy is doing. So can we do that modification personalized the way we are talking about when the car is in the garage? Why do I need to pay my insurance, right? Can we do that?
Moving to you, Ranjit, Stellapps is India's first dairy technology solutions company. You build automation tools integrated with cloud, mobility, data analytics for dairy farms, private dairies and cooperatives as well. Tell us how Stellapps is doing cattle insurance and what kind of role technology is playing in that.
Today we are looking at a couple of products to launch from an insurance perspective. One, how do you do a dynamically reducing insurance premium?
Okay.
Typically, the animal insurance premiums are very high in India, and farmers don't take that. So they're saying you cannot apply the national mortality average on all animals. You will have a very good performing farmers, very good performing animals. So they should get a dynamically reducing quarterly insurance premium. And this animal variable will indicate how that animal is performing, right? Number one. Number two, it's just not life. In this part of the world, only life has been insured. Health and yield has never ever been insured.
True, yeah.
So as a leap of faith, ICICI Lombard, I think, is very brave that way. They're also willing to consider insuring yield and life, right? Yield and health, right? Which has never ever been done. And quite interesting use cases when, with things like IoT, instead of the farmer actually making a claim, the claim can actually go to the farmer.
Okay.
How does that happen? When a car hits something, you have an accident, someone has to assess what happened to the car.
Sure.
In the animal death case, you know a priori the animal is going to die based on all the machine learning. So as the animal dies, you could actually send an alert telling the farmer, hey, your animal actually died. Do you want to claim insurance now?
Okay.
The farmer doesn't even have to come and claim that insurance, right? So I think these are the kind of things that IoT enables on the insurance.
Sudhir, coming to you, is InsureTech getting its due from investors?
I think so. If you look at the total investments which have gone in the last 5 years, it's about $5 billion worldwide into insurance companies only. There have been only about 1,500 startups worldwide which are tracked under that segment called insurance technology.
Yeah.
And of that, you've had right through to more than 100 M&As. So acquisitions have happened in the space. So Series A, B, C, D have all followed. I mean, they've all followed.
Yeah.
Is it enough? I think there is need to look at this industry. If you look at the industry, it's a $4 trillion industry between life and general insurance. And $4 trillion on a $80 trillion GDP globally is pretty high. We can think about using technology far more and far deeper in order to actually manage this loss ratio.
Yeah.
Now, it is the loss. Now, how much of that loss is preventable and through a process where the insurance companies can participate is very crucial.
On that note, it's time for a short break, but when we return, watch 10 fintech startups present their business ideas and find out who made the cut. Stay tuned.